John, thank you for joining us today. Could we start by you giving us an overview of OEG?
Yeah, so OEG is a leading provider of mission-critical services to the offshore industry. And we have two leading businesses within us, which is OEG Offshore, which is our logistics solutions business. Primarily, it provides cargo carrying units, which are used for carrying everything that can be imagined to go back and forth to offshore platforms. And it's an essential service to take anything, food, drilling equipment, anything that has to be required to go to the platform, and all the waste that platform produces to take back to shore. And we provide that all over the world. We have a fantastic market share, recurring base, and we're supplying there to the operators and the main service companies right across the sector. Our second business, OEG Renewables, is very much focused on offshore wind. And then that's it. It provides a range of critical technical services. And we split them into three different areas in terms of topside, in the marine solutions as well, and also subsea, also providing anything below the waves. And those are working in both construction and also operations and maintenance. And we would say that's probably the largest in what it does now in Europe, and is again turning into a global business with new work happening in the US and Asia as well.
Now moving on to your results. OEG has been on an impressive growth trajectory, reporting a step change in financial performance with strong acquisitive and organic growth. How would you summarise the results for FY23 and the general direction of travel?
Yeah, we're very pleased with results for 2023, delivering 434 million of revenue for the first time, and that was a growth of 35% over the previous year. And that was delivered through a combination of organic growth and acquisitions. And the key one being, with those acquisitions and that growth organically, it's led to us having a well-balanced business with broadly 50-50 revenues coming from our offshore division as well as our renewables. And very much we've built on our strategic offering with 5 new acquisitions through the year, and which has helped to give us a much more rounded portfolio, as well as expanding much more into continental European markets with some of those acquisitions as well. So yeah, they've been fantastic results and really sets us up for the future.
Now, OEG is a very different business today than it was a year ago. What's driving that change?
We've seen two developments. In our offshore business, we've consolidated the market, taking over 2 of our top 5 competitors, putting them together, getting efficiencies, really being able to offer our customers a much more integrated service, absolutely globally. We work in every hydrocarbon region now. At the same time, we saw the opportunity to expand into the neighbouring sector of offshore wind, and that's developed from zero. In 2020, we had no revenues from that sector at all, and it's now making up 50% of our revenues. And where we've developed in that is really this integrated service model of taking a fragmented services and being able to offer to the customers a wrap of integrated services. And the white space opportunity that exists in offshore wind is quite compelling in terms of there is quite a fragmented supply chain, and particularly now as we've gone global, that ability to offer these range of services is really appreciated. And that market continues to have just amazing potential. We see our addressable market tripling in size by 2030, and we're very much exposed to this fantastic growth dynamic for the future.
Now, the company this year hit a very significant milestone with OEG Offshore and OEG Renewables, approximately even split of revenue. What's the relevance of this?
I think it helps to give us this sort of stable base and a platform for the future growth. Evidently there's an element of a natural hedge that as the energy transition occurs, traditional energy may see less investment, which will go more into renewables. And depending on particularly energy security, which obviously is a really relevant matter these days, that speed of transition may change. And that's something we definitely see amongst our customers of how they move their investment budgets. And we have that ability to play across both those markets. And that's something it's a real benefit to our company in giving us that strength and financial flexibility. It also, I think it points to the fact of you are seeing this transition in terms of customer spend, and with more work happening in the future in renewables. And the platform we have across our business in different markets and geographies gives us the ability to change at scale. And I think that's where some of the smaller players in the market, we're more fragmented, don't have that ability. We're already in the US, we're already in Asia. As these markets develop in terms of renewables, we have the base and the platform to expand in those regions. And I think it's just a milestone on the road. I mean, with the growth that's happening in that offshore wind market, today it's 50-50, but in the future I see it being very much, led by OEG Renewables as our bigger part of our business going forward.
What are the other key developments you'd like to highlight?
We've made strong progress in terms of our management structure. We've brought in some key new hires. We brought in a new Chief Financial Officer, Chief Commercial Officer, Head of M&A, appointed a new CFO for our renewables business. So we've been very busy on the recruitment front at the senior level this year, as well as promoting up some of our internal talent at the same time. So that's been very key. At the same time, we've also raised new finance. We're very happy to bring in a new revolving credit facility of 140 million with 4 international leading banks, which gives us the firepower to do further acquisitions. And that's where having the new M&A team internally and also the new finance gives us that firepower to do that as it calls needs.
A great position to be in. Now, with regards to sustainability, OEG is obviously enhancing its green credentials with the expansion of its renewable division. However, its CCUs have an interesting ESG story too. Maybe you could expand on that.
You see it overall with our portfolio mix that, as we've mentioned, we were expanding heavily into renewables, and that's the biggest part of our ESG change. But it also, in terms of our CCU business, I mean, it is a naturally circular economy asset. In terms of traditionally, if I went back 40 years, the customers owned their own equipment, but it was a non-core asset, so they didn't necessarily maintain it and look after it the way that we do, where it's very much a core part of our business. So what we find is that traditionally they maybe lasted 5 years. We would have those assets last 20 years. And that has reduced the requirements, resources put into those assets by 4 times. And then on top of that, there's what we've done internally is our own initiatives. So we, in our offshore UK business, for example, we've reduced our emissions by 23% this year, which is on top of further reductions in the prior year as well. And how we've done that is, again, by looking at some of the efficiency of our operations to reduce the spend. We've electrified our vehicle fleet, and we've made changes to our lighting, heating systems, etc., to make them also more efficient. So we're very proud of what we're achieving in the sustainability.
So John, how much of your future growth is predicted on more M&A, and how do you approach that?
We have been a good business throughout our history, so we see more continuing, but evidently it's very hard to predict. It's not completely in our control, but we've built the team and the resources able to consummate it as it becomes available. As I say, we've mentioned we brought in a new M&A team, we brought in a new support and ability to integrate those businesses as well, and we have the financing available to do them. But we're not out there just trying to buy revenue or earnings. We're very much trying to deliver on a strategy. We are looking at where we can get complementary skills and services that we could offer to the customers, or new products and technologies which we can take to the market and deliver and push them out through our platform.
John, how would you describe the market drivers in your various sectors?
So if I start with our traditional business of OEG Offshore, it's very much a production-related business. So it's very stable across time. And we see, with the importance of energy security, that business is going to have very strong recurring cash flows for the long term. And where it drives slightly differently is there's a big regulatory adoption for our offshore equipment. In the North Sea, we've been using this type of equipment for many, many years. But in some of the other developing markets, there's a move from the traditional ways of, let's say, logistics to a safer, better way of handling equipment. And that's what drives a lot of benefits to our sort of business. And similarly, there's the outsourcing. I've talked earlier about how traditionally some of the companies would own their own equipment, not manage them terribly well across the life as a non-core asset. And we are seeing in many of those markets with those companies, as the equipment comes to life expired, they adopt the better regulatory standards and they also take the advantage of going outsourcing. So we see that's a very stable business, but growing above the trends of the traditional energy market. In offshore renewables, it's well known. It's a very fast growing area. We expect a market to triple in size. And we also expect that market to change quite markedly. Traditionally, the Chinese market, if we exclude that, we don't really operate so much there. But in terms of, it's been very much a UK or Northwest European market. But we are now working our first wind farms in the US. We've been working in Taiwan for the last 2 years. We've been awarded our first projects in South Korea. We're also now working in France, in Poland, in Italy. That industry, or that market is really starting to blossom in terms of becoming a much more international and global market. And that's where our scale and platform really benefits. That ability to work with our customers right across those different markets. The only challenge we see is keeping up with demand. It has awesome potential really going forward.
So John, finally, what do you see as the key strategic objective for your business this current fiscal year and beyond?
Well, we're very confident going into 2024, Scott. I think the market momentum and trajectory is there. We've put in place a new structure in terms of management team. We've improved and invested into our systems, to our assets, our resources. And we see ourselves delivering on $500 million of revenue to 2024. And then a bit step change performance even beyond that, with the $1 billion as being our target in the near term, and with 2/3 of those revenues coming from our renewables division. The growth there is just enormous, and the potential is amazing in that area. So in summary, Scott, the market opportunity is there, and we have the right people, the right service offering, and the right strategy to deliver on the growth that we have planned.